DSCR loans aren't just for single-family rentals. They're one of the most underrated ways to buy small multifamily properties in 2025. Most investors think DSCR loans are only for 1 to 4 units, but that's outdated. If you know how to structure the deal, 5 to 10 unit properties are well within reach, even without traditional income verification. If you overlook this strategy, you could miss out on bigger cash flowing assets that are still accessible even in today's tight lending environment. I'm Andrew Russell, owner and founder of RCG Mortgage, and I specialize in DSCR loans, not just for 1 to 4 unit properties, folks, but for 5 to 10 unit properties as well, to increase your wealth by buying larger properties with all sorts of cash flow on your way to real estate riches. I had a client referred to me named Luis, and Luis was buying a multifamily home in Brooklyn. Now, it turns out he was going to, a vanilla bank, purchasing the property, but he didn't realize it was actually a legal 5 unit, not a legal 4 unit. So it was set up as a 4 family, but it wasn't. It was actually a legal 5 family. So that lender ended up declining him because they said it wasn't a 1 to 4 family property, so it doesn't qualify for a conventional mortgage that he was trying to get. On the investment side, don't ask me, but that's what Luis was doing. So he was actually referred to us. And turns out on a 5 unit property, you can do a DSCR mortgage. So we were doing that same 25% down range, but instead of getting denied, we didn't do any of this documentation. We ended up going off the market rent for the 5 units, and the 5 units was enough in market rent to cover the mortgage. Now this property is getting such a sweetheart deal. He was waiting for something to be under market because the market's been crazy to try to buy something, especially on a 5 family. It was well over $1 million. Now he was going to end up losing out on all that potential future equity and real estate riches just because he was doing the wrong mortgage product. Now he didn't know he was doing the wrong mortgage product. He was actually misled. He thought that it was a 4 unit property, but by doing the diligence, which you're always supposed to do, the legal CO, the certificate of occupancy, what the actual property was a 5 unit property. So once we found that out, we can't do the typical vanilla, on the conventional side, which probably wouldn't have been the case anyway if you called us. But there was no harm, no foul. We put him into a DSCR loan, like we said, 5 unit property, and he got a great deal. And because of that, he ended up purchasing the property. He bought a couple more 5 to 10 unit properties. At this point, he has a nice portfolio where on his first try, he thought he was going to get a denial and he wouldn't be where he is today and wouldn't have known about this loan product if he didn't reach out to our team. Now, of course, you're like, hey, Andrew, clearly that's commercial lending. Something's a little off. It's not residential. So these properties are considered residential by guidelines. So a 5 to 10 unit property, again, 20 or 25% down, typically 25% down is the number. And as long as the market rent for all the units covers the mortgage, you qualify. There's no weird commercial guidelines, environmental reports, and sewer and trash and all this crazy stuff. It goes just like the 1 to 4 unit property, on a DSCR purchase, it goes the same way, but now you have 5, 6, 7, 8, 9, or 10 market rents you add together, and if it covers the mortgage, you're good. Now, of course, Andrew, I think your DSCR that you've talked about all the time is a 1 to 4 unit. No, it's actually good for 5 to 10 units. Some even doing more than that, believe it or not, but it doesn't just have to be a 1 to 4 unit property. Hey, Andrew, do I need landlord experience? A lot of these times they want me to have management or landlord experience, or they're just not going to let me get the financing. No, it's not the case. Now, is it crazy? You could have an investor buy an 8 unit property with 8 tenants and they have no experience being the landlord for all those tenants? Maybe. You want to make sure you know what you're getting into, guys. There's no specific requirement for experience. On these, they definitely don't necessarily want you to be a first-time investor or first-time home buyer, but there's no, you have to have been managing rental properties for 2 more year guideline requirement for this specific purchase. And of course, hey, Andrew, I'm sure the way you calculate cash flow is all sorts of circuitous and weird, just like commercial mortgages. No, it's easy. Commercial mortgages, again, different animal. You might be able to finance this property on the commercial side, mortgage-wise, but just completely different guidelines. It'll take the market rent for all the units, add it all together, and make sure that's what covers the mortgage. And if it does, you're Gucci. All right, so it's best to talk about, starting from the top, a DSCR mortgage for a 5 to 10 unit property. What's the pre-approval look like? What's an expectation for when you go into contract? And how does it all work? So let's start from the top. So if you reach out to your loan officer, ideally you want to work with a loan officer that works at a broker company, so they have access to all the lenders on the 5 to 10 unit side for DSCR, because one bank and a loan officer at one bank offering one bank's properties, might not get the job done because there's a lot of lenders in the space and entering the space for non-QM, let alone 5 to 10 unit property DSCR loans. So just make sure you work with the right loan officer at the right company type. So when you reach out and do a pre-approval, believe it or not, it's actually really simple. Fill out usually a secure online app, or they take your information over the phone. You never want to text or email your social security number, guys. Of course, rule of thumb. They run your credit. They'll look at the profile, the score, how you're paying your debt, and that's one of the most important things. Then they're going to look at your scenario. How many unit property? What are you looking to put down? Ideally, about 25% is a good sweet spot for these. And what does the mortgage payment look like based on your credit score, based on the lender, based on the rate, and all that good stuff. And from there, what's the market rent? Meaning, either yourself or the realtor you're working through, what is the market rent for all the units? A 5-unit property, there's 5 rents. 7-unit property, 7 rents. 10-unit property, ideally there's 10 rents coming in. You add it all together, and what is that all in number in relation to the mortgage? We'll go over what it has to be, but typically the 1-to-1 ratio gets the job done. Now, once you're pre-approved, then you gotta start, I call it shop till you drop. You gotta start looking at properties. Now, a 5 to 10 unit, there's probably not gonna be a surplus, but when you go and you find something you like, you obviously make an offer. And that offer gets accepted. Typically at that point, you'll want to go into contract. You might want to get the property inspected. Most people do. You never know in this crazy market. You might waive the opportunity for an inspection. I don't recommend it personally. And then once you're in contract, the mortgage process starts. At that point, an initial application will come your way with all the numbers, an estimate of all the closing costs. The loan officer will go over with you, and as long as you're good with it, you'll proceed. You order the appraisal, and the attorney or the settlement typically, or the realtor, they'll order title. So when that comes in and the appraisal results get done, ordered, seen, and come in, and then the initial review is done by the underwriting team for things we need from you, specifically bank statements, amount of reserves that you might have, which we've kind of alluded to or talked about, things of that sort. Again, remember guys, reserves, it's the mortgage payment left in the bank after you close. How many months do you have? So if it's a $6,000 payment, 12 months of reserves is $72,000. They may want to see that for these type of programs. The lender will ask for some stuff from you. The appraisal has to come in satisfactory for value of what you're buying it for, and the market rent has to add up to what you thought it would be. And the title report has to come in clean, no issues, nothing that's preventing you from closing and receiving clear title or clear ownership of the property. When that all comes together, those 3 things, you marry it all together, send it to the lender's underwriting team. They'll clear your loan to close, and they can work on scheduling closing. And that whole process could take as quick as 2 to 3 weeks. Sometimes, depending on if you're buying in the good old state of New York, sometimes it takes 2, 3, 4 months, which is typically a seller-specific thing. But that's really an expectation for when you're buying, going into contract, and for a closing. So that all sounds great, but let's break it down and just show it practically from a numbers perspective. We'll show 2 scenarios. They're very similar, but it's really like a 5-unit, 5 market rent, property, or a 10-unit. With 10 specific rents coming in. Let's look at the differences of the 2, just to get a rough overview of what it looks like, what it takes to qualify, and is this type of investment for you? Of course, more money, more problems, 5 to 10 units, more tenants, more, potential issues, but you got to risk it for the biscuit, guys. These properties typically have higher sale price ranges, which means as they grow in value, there's more equity dollar-wise than if you just would have got a 1 to 4 family. So it might be worth it to you, but it depends on your appetite for being a landlord. But let's take a look at 2 specific scenarios. The black marker is all the rage. So if we split this into 2, let's look at a 5-unit DSCR and a 10-unit purchase for a DSCR. Right? So let's assume this 5-unit is for $1 million. Let's assume this 10-unit is for $2 million. What's 2 milli between friends, guys? All right, so just understand 25% as a down payment. Let's work off that. 25% is $250. 25% of that is $500. So this leaves you with a $750,000 loan. This leaves you with a $1.5 million loan. Now let's roughly just use a rate of 7% for both of these. We're just going to use some rough calculations. Not exact on the head, guys, but just make it nice and easy for you to understand. So based on this, 7% would be the rate. This would be the APR. Let's assume taxes per year on this property are $15,000. Let's assume insurance on this one is $6,000. Let's assume taxes on this one, $30,000. insurance on this puppy, let's say, let's really overestimate, $12,000. All right, so on this one specifically, you're at, let's say, 53, roughly 100 a month for principal and interest. And on this one, you're at 10,500-ish a month for principal and interest. So on this one, if we add in taxes and insurance, you have another $1,250 a month for taxes, and let's say another $500 a month for insurance. So if you add all this stuff together, you're at something like $6,550 plus the $500, $7,050, all in a month for everything included. And that's the number for the mortgage. That's what we're going to use, this specific number, see if this qualifies. Now, we're not done just yet, folks. You know, this one, if we're adding in another $2,500 a month for taxes, another $1,000 a month for insurance, you're at $14,000. Wow, that's a payment if I've ever heard one, just for the mortgage. Now again, remember on this one, there's 5 units. You got 1, 2, 3, 4, 5. On this one, you got 10. It's gonna be a minute, guys. Maybe you wanna speed this up, editor. So, just to keep this real simple, remember on the 1-to-1 ratio, they do on these want to see a little bit more than 1-to-1. We're going to work off 1-to-1, but they may want to see that the market rent actually overcovers this mortgage, believe it or not. So let's just assume on a 5-unit property at $1 million, each unit is getting $2,000 in rent. Now, you don't have to work with over 10,000 clients like your boy Andrew to know. If you add that all together, you're at $10,000 a month. Now, this is a great scenario to work with. And again, the mortgage payment based off of this is around $7,000. So this goes to show you that this rent almost covers at 150%, meaning the market rent is almost 1.5-ish over what the rent is. So you're gonna get the best pricing deal off this, but off this example, on a 5-unit property with 25% down, which is a nice down payment, with a rate of 7%-ish, you know, this is probably going to come, guys, with a 5-year prepayment penalty, which means to get this type of rate, you're going to have to stay in this mortgage for at least 5 years, or if you pay it off or sell, which is acceptable, there's going to be a small financial penalty that they're going to add to the payoff. You know, but again, based off that $7,000 mortgage, if each unit of the 5 units, the market rent, doesn't have to be rented right now, it could be vacant. If they're getting $2,000 per rent per the market, it's going to be $10,000, which more than exceeds. So this scenario, let's assume you need about a 700, a 720 credit score. Let's assume you're going to need 12 months reserves, which is like a little less than $85,000 for reserves. This scenario is doable all day long, and as you can see, it's a home run of a deal. Even if one unit doesn't pay rent, you're still at $8,000, which covers the mortgage. So if you want to have an insurance policy, because God forbid a tenant's not paying on time, this 5-unit property looks like a home run. Now the 10-unit property, now $14,000, that's our new number, right? So if each unit, again, let's just use 1,800. Say they're smaller units. So 1,800 units seems less. You're like, why would you buy this 10-unit DSCR property? Because 1,800 a unit times 10 is 18,000. What is 18,000? It's more than 14. So it's 4 more. So it's like more than the 1.25 coverage, meaning the market rent is over 1.25 times the actual mortgage payment. So again, here's another example of, in this property, this is really a big juicy one. $2 million sale price, 25% down, you know, $500K, $1.5 million loan. But guys, do me a favor, go in our description right now. We're talking about so much stuff here. Before you sign out of this video, I want to make sure that you get our cheat sheet for DSCR loans. So in our description, click the link. Our cheat sheet will have everything that I'm talking about, all the breakdowns for you, but it's needed. I made it for you myself, guys. So make sure you get it, because this stuff gets confusing. To me, this is like second nature. To you, it might not be. You might be like, hey, I'm willing to take a risk, Andrew, and get a 5-unit property. But here's a great cheat sheet for you guys. So make sure you go in the description, click the link, get it for you guys. It is free. So again, on this property with a 10-unit, $2 million, 25% down, $500,000. Say that's been saved, $1.5 million loan with a rate of 7%. Between the mortgage, tax, and insurance, you're a little bit over $14,000 a month, $18,000 in rent. Now the cool thing about this is, again, just from a safety perspective, that $18,000, say 2 people don't pay, right? So $3,600. So you figure that's around 14,400, right? So you're still there, meaning even if 2 tenants out of the 10, you have a 20% issue where 20% of the rent is not coming in, you're still gonna cover. So this is another example of this would be a great buy. Now, are these in actual reality, properties that you can purchase in this capacity? I'm not really sure. I know the rates, although you hear maybe a rate of 7%, you might think it's a little bit high. As you can see in this example, if you find a $2 million property and you're able to put down that 20%, it looks like the market rent covers. And in the back of your mind, there's a bit of a hedge, meaning you will not lose sleep if 1 or 2 people aren't paying because, again, the mortgage is still covered if 8 of the 10 units pay the mortgage on time. All right, guys, if you're thinking bigger and you want to scale your real estate portfolio, make sure you watch our next video, DSCR Loans in 2025, Mortgages for Investors. We're going to go over 2025. What a great year, right? What's changed in the DSCR space, what got better, what got worse. So make sure you click this video right here. Make sure you watch it, guys. It's going to give you a full overview of everything surrounding DSCR.